Deal-making worldwide hit nearly $4 trillion in 2019. That's the good news, and it's according to Refinitiv. But so far this year, it has been crickets, like nothing out there, been very quiet. We've yet to hear about any real major deals that have driven this excitement on Wall Street. And joining us right now to talk about what is actually happening here and whether it's all going to pick up, what's going on behind the scenes, is the one and only Robert Kindler, Vice Chairman, Global Head of M&A at Morgan Stanley, resident comedian. Morgan Stanley was the lead advisor on several of last year's biggest deals, including Bristol-Myers Squibb's acquisition of Celgene, United Tech's merger with Raytheon, and so many others. So what gives?
Well, it's good to be here. So
it's good to see you.
Yeah, 2019 was a very good year by historical standards, absolutely. You also have to remember that when we were sitting here last year, we were in the middle of a government shutdown. Right. We had just come off of December, which was a big market break, and there was a lot of volatility.
Yep.
So it's actually pretty much of a miracle that it ended up being as good as it was, just given all the volatility and uncertainty. I actually think that this year we're not going to see a lot of large deals. I think there'll be plenty of activity because M&A, you really need to do M&A. And I'm sure you all saw in the conference in Davos that CEO confidence is high, right, and and all of that.
But, and that's when people usually do deals.
Right. And
usually the worst time. They're overconfident, right?
Well, it's certainly the case that there are times when deals are done for the wrong reasons and have overconfidence. No question about it. But if you're a CEO right now and you're looking at what your trajectory is, a lot of the things you've been doing the last couple of years, like increasing margins by cost cutting, that's kind of played out. And even stock repurchases, investors really would rather you be investing for growth rather than just returning money. So I think it's an important tool. So why do I think there are going to be fewer deals? I actually think a lot of it's regulatory. Right. I think that the scrutiny that large deals gets is just something that CEOs, I'm talking about $20 billion dollar plus deals. In fact, for the large tech companies, they're probably shut out of doing anything.
I was just thinking they'd even do small deals, but I used to think they'd struggle to do small deals. But then you saw Facebook, for example, bought a company called Control Labs. I don't know if you know, but it's about a $500 billion transaction. One of these things that go on your wrist that it's going to be able to control your mind. It was a shocking technology.
Wow.
And it closed. Almost like within a couple of weeks, nobody said peep.
Well, that's the thing. It's small deals. Now, if you look at the large companies,
but I would have thought that even a big company going after a small company,
I think it's going to be
with a unique technology, people would say, I don't know, do we want that to happen or not?
No, I think it's an issue. Right. For companies like Microsoft, who's obviously doing just fine, but they have done large acquisitions like LinkedIn and other things. Obviously, they're doing great without acquisitions, but it's going to be a little bit harder. I think, for those kind of companies to do deals. Now, obviously, Apple hasn't done many deals, Amazon hasn't done many deals, but Facebook and Microsoft have.
So you don't think there's a dynamic where it says, well, look, we at least know what the regulatory terrain is right now, what the political backdrop is. Let's try to get something in before the election. Maybe there's going to be something new coming?
I actually would have thought that, but we've ended up with a very populist administration now. And it's also very unpredictable now.
Yeah.
So deals are being blocked under CFIUS. They'll basically say, I don't care that you are a donut company. You have a warehouse within a mile of a military installation. We're going to look at that. Right. And that makes Chinese deals very hard to do.
Is it security concerns that rise more large, or is it I don't know, the whim of whatever regulator or administrators there? Is it populism? Which of these things is driving it?
It's all of those things, but I think it's populism. Yeah. And it's very unpredictable. You end up having the administration challenge the Time Warner AT&T deal, which is a vertical merger, and not challenge Disney Fox, which is horizontal. And in fact, they just came out with vertical merger guidelines. So I actually think that while I would have, Mike, I would have predicted that, in fact, people don't think it matters who gets elected because they think that this president is unpredictable in certain ways, but very populist.
We just had Craig Moffett on the program in the last hour, and he made a provocative prediction, if you will. He said, look, AT&T over the next, I think his time period was 3 to 5 years, so I don't know if it comes sooner or not, will ultimately decide that the Time Warner transaction was not the right decision. and would divest that. He even made an even more provocative idea, which he said maybe they try to merge that with NBC Universal, which is owned by Comcast, and the Comcast would ultimately spin this business off as part of some kind of larger transaction. What do you think is going on, especially given what's happening in media? And that's been your the media. Your original. That's where you started your career.
Yeah, it's interesting. We go through these waves, right? So Time Warner spun off Time Warner Cable,
right?
Because of course it makes no sense to have content together with distribution. And the very next year, Comcast bought Universal, right? Because of course you need to have. And what it really is the case is that the Comcast-Universal deal made sense because they're both good businesses and they're run very well.
Right.
There's no synergies between AT&T and Time Warner. It just was a better cash flow generative business to support the dividend. I think that's entirely possible. And by the way, no one ever looks back at media deals, but there's been a lot of difficult media deals. Look at Sinclair with RSN, and look at Discovery with Scripps, and Meredith with Time Warner. I mean, the list, and obviously AT&T with DirecTV. The list is quite long.